Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steve Sosnick, chief strategist over at Interactive Brokers. Steve, it's great to see you as always. Welcome back to Trade Talks.
Thank you so much, Jill. It's always a pleasure to join you.
All right, now job numbers confirmed the high spirits that investors were already feeling, and then we have the Pfizer news only amplified the positive moves in the major averages. What are your thoughts on the macro environment right now?
The macro environment today was, I would call it a Goldilocks number, but there was nothing too cold about it. It was basically not too hot and warm enough. It was a very good number. We added between the revisions and the beating of estimates today, just about 200,000 more jobs than we expected over the past 2 months, which is a really good sign for the economy, but not such a good sign that the Fed is going to freak out. That's really the thing that markets want to see. We saw the good reaction when Powell basically indicated that they were going to taper but not do anything to interest rates for the foreseeable future. And this confirms that. And then you throw on the Pfizer news, which was very good. Obviously, anything that can help put COVID in the rearview mirror is a plus. I think the only reason we're not screaming higher on that news is, remember, we did have similar news from Merck around, I think it was October 11th. And coincidentally, the open on October 13th was roughly the bottom for the, I don't even want to call it a correction, whatever it was, that little dip we had in September and October. And that happened shortly after the Merck news came out. So I think that to a certain extent, some of it was priced in, but obviously anything good on the COVID front is good. No way around it.
Right. And, well, Steve, I think traders are asking themselves, okay, we have COVID news. We know that we're talking about inflation, tapering's coming up, supply chain issues. I mean, the market's always worried about something, but what's going to take it the next leg higher, considering the valuations that we're at? And granted, earnings have been quite well. So when you look at VOLQ, right, the Nasdaq Volatility Index or any of the other volatility indexes that are out there, is there anything that you're seeing that suggests, okay, it's going to seasonally be a great November, December, or perhaps we'll get some chop? Anything you're seeing in the vol complex?
I think in the vol complex right now, you're not seeing very much chop. I mean, they're all fairly depressed. One of the things that I like to look at is I basically subtract VOLQ from VXN, which basically gives the wing, gives a tell on the wings, because as we've discussed before, VOLQ is strictly at money volatility. VXN has all kinds of volatility, wings, noise, etc. And so when you distill that, neither one is telling you anything about the market being too worried. There's not a lot of at money volatility as shown by VOLQ. There's not a lot of excess wing volatility as shown by the differential between VOLQ and VXN. I would argue that the one thing now that I worry about is almost the complacency, the feeling that we are, moving higher. It's seasonally a good time. Everything's great. There's not a ton of worries on the horizon. And so that in some way, as an old-time trader, or particularly when I used to, manage the risk for what could go wrong in a multi-billion-dollar option portfolio, these are the times that actually scare me somewhat, because you have to think about what the wall of worry is. What are we climbing? Or is it just sort of euphoric? But in the short term, the markets believe that they're smooth sailing ahead. And so, on the other hand, if you're thinking about hedging, it's as cheap as ever to do it. At least it has been in the past few months.
And that was my next question to you when you were talking about managing risk within the portfolio. So let's say I have a tech-heavy Nasdaq-100 portfolio. Protection is cheap right now, as you had mentioned. Vol levels are depressed. So let's say, am I looking at the Qs? Am I looking at XND index options? How would you hedge yourself in this case?
Well, I would think I'd look at any of the above. I mean, people are very attuned to using the Qs. It's a name they know. They're used to using them. But now I think people really do need to be looking at XND. And I'm not saying this just because I'm on a Nasdaq-sponsored, event webcast here. I am saying it because I went through this with some of your experts, and there are some really good features in XND that I think people need to be aware of. Those include the fact that basically it's an institutional option class available to retail investors. And what I mean by that is it's European settled and it's cash settled. These are two things that institutions like to utilize in the big NDX and SPX complexes that really haven't been available, to smaller investors in the NDX complex until now. And the subtlety there is, with a European option, if you're writing them, you're not subject to early exercise. which means you have much more control of your hedges. You're not going to find that one day one of your legs is gone. The other advantage you have is pin risk is minimized when you use a cash settled option, because instead of, especially if you're right around a strike and you haven't covered, or if you're right around the strike and want to exercise, you may not want to go home long whatever the ETF is that you've been using as a hedge. I'll use QQQ as the example. In a cash settled option, you know what you're exposed. You're either going to get exercised or not. But if you do, you're not carrying that risk over the weekend. It's cash. It's done. You start again on Monday without having to worry, how am I going to get out of this position if something happens over the weekend in one direction or the other. And so these are two big advantages. And that's why I've started to look at XND a lot more as a means for hedging, because it's got some features that professional traders like to use that are now available to smaller investors.
All right, Steve, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.